be a balance where you have truly examiners that can get in there and give their real honest feedback on whether the banks are truly substantially being substantive and doing not only the right thing, but looking at the right risks, not just focusing on the graph or that they have a risk officer or they have this. You know, how many chiefs do we need in organizations? We already have in place a system where it can be audited, and we can see, you know, there was already the concerns. If you look at the other banks that went under, the examiners had concerns and things. But I guess in that position, you know, did they have enough teeth to say, don't grow, don't do this? You know, that's where I think it comes in. There definitely needs to be where you talk to the examiners, because in reading some of the findings of the other banks that were taken over and failed this year, the examiners told them they're at risk, but then at the end of the day, it is the bank's responsibility to assume that risk. You know, that, okay, in light, regulators, you brought to me the attention that this is risky, but you know what? We feel that we've mitigated it and we're going to go forward anyway. So yes, there needs to be that fine balance. You can't tell them exactly what to do if it's not in a form of law or regulation. Just because you don't like the program doesn't mean you can't stop them. But if it is truly affecting the safety and soundness, and the regulators can truly demonstrate by what you're doing is impacting the safety and soundness in these manners, then I don't understand how they've allowed, you know, those banks to grow so immensely during that time period of 2 to 3 times their size, while everybody knew that the money that was put on the market was put in artificially. And then at some point that money was artificially going to be also brought out of the market.